German Mittelstand is hit hard by but will emerge strong from COVID-19, creating turnaround investment opportunity abound. Are you interested in German turnaround investing success factors amid COVID-19? Then this is for you: relevant, informative, actionable. Let's get started. I am Alexander Engelhardt of Deep Value Advisors. We protect, unlock and create reputation capital. Please connect on LinkedIn. If you seek project support, send me an email. Medium and small, family-owned Mittelstand companies are Germany's economic backbone. Half of them are hidden champions, but many have low equity ratios. COVID-19 hits Germany with a -6 to -9% slump in 2020 GDP and full fallout expected in 8 to 12 months from now. Automotive, mechanical engineering and probably pharma were hit hardest because of low teleworkability and physical distancing and corresponding high infection rates in Bavaria, North Rhine-Westphalia and Baden-Württemberg. Some relief is expected for Q3 and Q4 2020. Production is expected to return to pre-crisis levels in late 2022, provided there is no second lockdown and the economy is returning back to normal as soon as possible, including hybrid working. More than half of surveyed companies say they are in distress, and more than 20% see their survival at stake. In manufacturing, up to 25% of automotive and up to 50% of metal production and processing businesses fear they might already be walking the plank. Automotive expects up to 5 years to recovery. German companies file for insolvency notoriously late and will file even later under the current crisis insolvency regime. Economic reality and insolvency law are decoupled until October, maybe until April 21. For the first time since reunification in 1989, in 2020 average pay might decrease because of short-term work and weak collective bargaining agreements. But German works councils have woken up. Investors can no longer expect workers to back down like in the immediate survival crisis in Q1 and Q2. Here are the key success factors turnaround investors should consider. Money talks, not always. German consensus society prefers responsible long-term ownership over financial short-termism. Trust in financial investors is low, and trust in distressed debt investors is like the lamp in the fable which trusts that a lion is a lion. Some foreign serial bidders learned this the hard way, always coming late to the party, paying for auction fees and phase 1 due diligence, and never closing any meaningful transaction. Creeping reverse deals, buying non-performing debt first and swapping it into equity later, are possible. This said, successfully leveraging a forced equity position following a battle for corporate control makes stakeholder relations even more important going forward. It is possible to run a business in Germany without societal license to operate, for sure, but it is much more difficult, time-consuming and expensive. This holds even more true now, with people watching very closely how companies behave and consumer behavior being increasingly influenced by brand claim actual performance mismatches. Matter of fact, stakeholder management is among the most important success factors from target identification to exit. Turnaround investors cannot hope to succeed without it. The second success factor is a broad and deep understanding of the market, industry, business and the problems of the target company. What is the exact problem? What are the key drivers and levers? This is a sophisticated market with sophisticated players. Is there anything left that can be done at all? Is this already a zombie business? And if not, will it soon be zombified by knock-on effects of the pandemic? Don't overlook a critical problem component. Don't get caught by undetected risks, liabilities, industry problems or possible regulatory changes. Pink elephants hide in unforeseen places, and there are swans, white, grey and black. Obviously, there needs to be a viable business model and core business, a quality asset base, downside protection and upside potential. Now, does what was true pre-COVID-19 also apply at or post-corona? What will the world, the market, the target be like tomorrow? German industries are undergoing necessary accelerated transformation and change. This requires adaptation cost and time. How much of this is external, how much internal? To what extent can it be influenced and controlled? Does an investor, for example, stand a chance to enforce massive downsizing against trade unions and public unrest fast enough? Some 17% of German GDP are tied to globalized value chains. On balance, Germany cannot afford to deglobalize. Who will and who won't be able to diversify global delivery chain risk? German achievable teleworkability is yet unknown. Estimates range between 10 and 90% depending on the industry. Who will be able to achieve maximum production output at minimal infection rate and who won't? How can a new owner fix this fast when the former couldn't in the past? If no German strategic buyer wants the asset, why should a foreign investor? If everybody wanted the asset, would the highest bid mean winner's curse or blessing? Who will want this in 3 to 6 years from now? Why? At what price? How can one design the whole process? Buy, fix, sell, so to maximize exit value? Most answers to these questions are marketplace and even company specific. Another country specific is that labor relations can cost a lot of money and eat a lot of time and thus eat away profits. Finally, with the market for turnaround or distressed assets already being narrow, a market for secondary is almost non-existent. IPO activity is low, so a trade sale to a strategic buyer will most likely be the only viable exit option. Timing and time to exit might demand patience, that is more capital and less profit, which brings us right back to valuation and price. Pre-COVID-19, seller expectations were already high. Many business models are now a question mark because of the pandemic or under threat of knock-on effects. Risk has increased, holding periods will be longer, capital requirements and equity portions be higher. Price must reflect this. Asset value, net accumulated debt plus earnout won't be acceptable and M&A insurance will not close the ask-bid gap. This all hints at two likely deal sources. First, direct corporate carve-outs motivated by better ownership and core business focus for the rather traditional private equity investor who does not shy away from doing a normal deal in abnormal times. Second, indirect deal sourcing from banks that need to deleverage their regulatory capital by selling off corporate non-performing loan portfolios for the turnaround investor with greater risk appetite or for the distressed M&A player. The German NPL business works smoothly and is expected to grow again soon. As always, turnaround management capability is crucial. Financial literacy and engineering skills, turnaround and transaction experience, negotiation skills are a given. What is needed more than ever are a global perspective, intercultural competence, communications and hands-on operative skills. Turnaround investors are about to start at a point where very smart people have tried everything but have failed, maybe multiple times and over years. Cost-cutting and downsizing alone won't do it. Investors need to create new visions of hopes and dreams, adapt strategy, create loyal following within the whole stakeholder universe, and implement the right mixture of alignment incentives, monitoring and reporting, control and, where necessary, well-communicated, bold and decisive action. As to insolvency proceedings, there is no fast track available. Understanding of the insolvency legal regime pre and at insolvency, in and out of court is helpful, not only when buying from the receiver, but also just in case an otherwise sound, fully pre-packaged restructuring slips into protective shield, self-administration or full receivership. Now we can put everything together. A clear understanding of the problem, hands-on strategic and operative turnaround management, and first-rate stakeholder relations will be the most important success factors. Done. Do you want to test your turnaround investment thesis? Do you seek stakeholder management support? Reach out to us. Thank you for watching.